This video is for educational purposes only. This video is not a recommendation to buy or sell a security of any kind. Recorder's on. It's 8 o'clock. How's everybody doing? Welcome. Hi, this is Rick with Hit and Run Candlesticks. Doug. Yeah, email. Email stinks, I'll tell you. Emails, it used to be cool, not so cool anymore. Okay, all right, so tonight, let's make sure everybody gets in here. Tonight I'm going to talk about the T-line bands and how to use them to reach your trading goals. And I'm going to also show you how to set them up. And we're going to set them up first. So grab a pencil and paper. Because of time, I'm only going to be able to go through this one time. I will try to take it nice and slow, but I'll try to get you there. But like I said, because of time, I can't go over it multiple times. I hope everyone understands. This is being recorded. Yes, it is. And while we're still having a few people log in here, I can see the number clicking away. I want to talk about goals really quick. And it's very, very important to have your goal. And if you have a daily goal or a weekly goal or a monthly goal, then this will all kind of make sense a little bit using the bands a little. And, well, you'll see. I'll show you on a few things here. What else we got? I'm just trying to kill just a couple minutes here. Hope everyone's okay with that. There was one more thing. I am using TC2000. Everything I'll be talking about will be on TC2000. There's a link. If you don't have TC2000 and you're interested in TC2000, this can be set up on other programs from what I understand, but I can't help you with those because I don't know any other program. So this is the only program I use, and so it's not that I can't help you. Well, it is. I can't help you because I don't know about other programs. So Lauren is saying your comments to me on Sunday evening about goals and targets were very helpful. Thank you. We're gonna talk about that just a little bit more, Lauren. I think for those that don't know me. And by the way, here really quick here. This is what is this? Tuesday night, March 31st. Tomorrow's April Fool's. For those that don't know me, I'm extremely goal-orientated, not just in trading, but in my personal life as well. Extremely goal-orientated. And trading, no difference here. And I think you have to have a goal in mind. I don't think your goal should be, I just want to make money. And your goal shouldn't be, I want to be rich. Those are not good answers for a goal. You need an achievable goal. Don't make a goal that you can't achieve. I get it. You might want to reach for the stars a little bit, but in this case, let's set a goal that's very achievable, and then once you achieve that goal, you can reach for the stars. But don't reach for the stars first. Don't try to do something you can't do, because all that will do is mentally it will just destroy you. You want to be able to reach your goal. You want to be able to pop that champagne cork, and you want to be able to tell somebody, and you want to be proud of it. But if you can't reach that goal, it just kind of shoots you in the foot. So make goals. We're not going to talk about making goals. We're just going to, I'm just suggesting make a goal. If you don't, we can certainly help you. If we have time tonight, we can talk about it. But way to go, Thomas. 2 positions today, cash and sitting on your hands. That's not a bad idea. We have job reports coming up. earnings right around the corner, and I don't see any good news. I was talking to somebody today that, a good perspective on what's going on is that it's possible that, well, first of all, I mentioned here a while back that I think the problem we have can be divided into two halves. One can be the virus, and the other is the financial. And right now, I think what we're going through is the virus side of things, the scare, the fright, the unknown. And somebody said, and then I think the financial side will come. The financial side will get here. Somebody suggested today to me, they were talking to me, they said, is it possible that the virus side has already been built into this market? I hadn't thought of that, but that is very possible. It is very possible that the virus side, the fright, that part of it may be built in. And now what comes next is the financial side, which I think we can go much lower on the financial side. So this whole part was virus side and then the financial side coming. So that could be it. Anyway, it was a very nice conversation I had and very enlightening, and somebody else's point of view, and it's very possible there. So, all right, John. Let's see, Johnny L. So you say I should quit trying to trade. I didn't say that. You must be. I don't know. No, I didn't say that. I do think that it might be, for some traders, it might be in your best interest to sit on the sidelines a little bit. Yes, I do think that for some traders. And it's an easy answer. It's an easy test. It really is. Have you made money the last couple weeks? If you have, keep trading. Everything's going well. If you haven't, then you might want to sit on the sidelines. Let's see. Nigel says, who says 100,000, 250 deaths in the next month? Holy cow is right. And, my heart goes out to anybody and everybody that is part of that. Stay safe. I know I personally was at the doctor's today for another reason. And I was talking to my doctor, and he said that they're expecting here in Springfield in the next 2 to 3 weeks that the hospital there will be packed jam. So he said, Rick, be careful. And he said, stay away from everybody. Let's see. Arch, you can't see me. We can pass that up right now. See, Johnny L., 35 years of my goal so far. Okay. So, Johnny, is what you're saying you've not reached your goal? You've not made your goal so far? Let's see, Tim. Hello, John. Let's see. What is your top secret list on your charts? Come on, you can tell us. I can, yeah. Here, I will, too. Right there it is. Exponential moving average 34. I'm laughing because sometimes I do things like that just to mess with people. In fact, not too long ago, I think it was Ed who was looking at my screen. I was sharing a chart with him, and he started laughing. What is that? It's just nothing. It's just to mess with people. Here's another one. What's this one here? This is the volatility stop set to 1010. And this is what I use for the red-green line right there. So just thank you for asking. All right, so let's get started here. What I want to do, again, is I'm going to start off with, let's set up the T-line bands, and this is what they're going to look like. This is the SPY right here. Let's get rid of this. Here's a SPY right here. Let's see, there's Visa. There's what Visa looks like. Here's what Snap looks like, Marvel. Let's take Marvel and let's look at this on an hourly chart. This is what it looks like on an hourly chart. Here's a 30-minute chart, 15-minute chart, 3-bar chart right there. So, but right now we're going to stay with the daily. By the way, if there is no sound, maybe somebody could type this in there for me. Reboot the room. If you lose sound, reboot the room. And then I think we'll be good. Thank you, Rob. Appreciate it. Too many streamers. Yeah, Ed, that's true. Thank you, NB. Appreciate that. There'll be 40,000 other people type in. Oops, I think Ed is fixing something. Testing 1, 2. Testing. There we go. Testing 1, 2. All right. There we go. All righty. Okay, so let's get started. What we're going to do is set up the T-line bands. Remember, I'm using TC2000. I can't help you on any other program because I don't know any other program, okay? Let's keep that in mind. I posted a link up there. If you're interested in TC2000 and want to give it a go, I'll post that link again. There we go here. All right, let's get rocking and rolling here. So the first thing we're going to do, is set up, why does everybody seem to need to type in no video? Just reboot the room. Very simple. There. We can't help you. Do her again, Angela. All righty. Okay, so here goes. What we're going to start with is you're going to need 3 moving averages on your chart. One of them is going to be the 17 EMA. 17 EMA, and you want it EMA exponential, and we want to put it on the low. We want to put it on the low. Charts are loaded. Everybody's still here. Grief almighty. There we go. Charts back up. All right, I'm going forward. I'm not going to stop any longer. I'm going to go forward. We're not going to stop any longer. All righty. You're going to need 3 moving averages. 3 moving averages. The first moving average is going to be the 17 EMA. 17 EMA. And 17 exponential. And we want to put it on the average of the low. Average of the low. And you can put the line on the chart if you want. You can put the line up there. You can see right there, it's that little green line that I have. You can put it up there if you want, but in the end, we're going to turn it off. It's actually still there. It's just now the opacity is down to where there's nothing there. So it's there, but it's not there. Is everyone having a problem? Can anyone hear me at all? All right. Okay. You're going to need 3 moving averages. The first moving average, let's put up, is the 17 EMA. 17 EMA, exponential moving average. And we're going to set it to the average of the low. Average of the low. You can keep the moving average up if you want, but what we're going to do, in other words, you can keep it so it's visible if you want, but in the end, we're going to turn the opacity down to nothing. So it's there, but it's not there. We don't want to see it in the end. We don't want to see it in the end. The next thing we're going to do is we're going to put the T-line, which is the 8 exponential moving average. And by the way, for those that don't know how to do that, right-click on your screen, go to Add Plot, and just type in move, MOV, and you'll see the moving averages come up. Click on exponential, and then you can build it from there. So we're going to put the T-line, which is the 8 exponential moving average, the 8 exponential moving average, exponential, and we're going to put it on the average of the high. And again, there it is right there, but what I'm going to do is turn it off. It's there, but it's not there. It's there, but it's not there. Then what we're going to do is we're going to add the T-line. And you know, the other night, I think I said Sunday, I believe I said it was the regular T-line. If you want to keep it that way, you can. But the way I have mine set up is on the low, and I misspoke Sunday night. So 8 exponential moving average, set it on the low, on the average of the low. Again, there it is with the line, but we're going to turn the line off. We're going to turn the line off. It's there, but it's not there. And then what we're going to do is we're going to add the bands. Just in case no one knows, the bands are merely linear regression. That's all it is linear regression lines. And what we're going to do is we're going to use the data source will be one of those 3 moving averages we just created. So let's come up here, and I've already got mine made. And you can see here, it's the linear regression, and I use 25. Now, I've played around with this. I think I started out with 45. I went down a little. I went up a little, down a little, up a little. I just settled on 25. The truth of it is, there's nothing magic about linear regression 25. You can have yours whatever you want. It's not the magic of the bands or the T-lines or anything. The magic is how you use them. That's the magic. So you could literally make this any way you want. You could set your moving averages up with any 3 moving averages you want. Or if you only wanted to use 2, you could actually do that. Remember, it's not the magic of this. It's the magic of how you use it. And I'm going to show you that too. So now what I'm going to do is, let's go back here. Linear regression. I set it to 25. I like mine green. And we're going to make sure that stays on. See that green line? It disappears. I can move my opacity button to the left and it turns it off. Turn it back on to the right. I've named it T-line high. And look, data source, excuse me. The data source is the T-line high. So rather than using the main chart or any other moving average, I use the T-line high as the data source. So what we're doing is we're taking the linear regression of that moving average. The linear regression of that moving average. You can name it whatever you want. I just put mine T-band high. So T-line high is the moving average. T-band high would be the band high. I'm going to close that. And then what we're going to do is create the T blah, 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 blah. T-band high right here. We already did that one, didn't we? We're going to do T-band low. Here's a T-band low. Mine's colored a blue color, kind of a purple blue color. Again, it's 25. And you see I can turn that off and see the line disappears. I'm just going to turn it back on. The line's back there. And we're going to use the data source of the T-line low that we created. You can name it whatever you want to name it. I've just named mine T-band low. And again, the data source, that's kind of the trick here. The data source is not going to be the chart, price action. What it's going to be, it's not the candle, which candle's most common. What we're going to use is the T-line low as the data source. I'm going to click OK. And then the 17. Remember, the first line we created was the 17 EMA of the low. So what we're going to do is we're going to create that one. And it's the same thing. I just made mine red. It's a 25, linear regression 25. Again, see, I can turn that off if I want, but we want that on. And the data source will be the 17 EMA of the low. 17 EMA of the low. And from there, you now have the T-line bands. Now again, in lieu of time, I can't go over that again, okay? This is being recorded. I hope everyone understands. In lieu of time, we'd literally be here all night. Let's see. Somebody set up that Greg. Greg, I know you don't use TOS, but do you know if TOS will linear regression setting? I believe it does. Yes. All righty. Now let's look at some charts with the T-bands on there on how I might trade those or how I might use those a little bit. Now, one thing I want to mention here is it doesn't matter what time frame you're looking at. I've got the daily, the 4-hour, 130-minute or 3-bar chart, the 2-hour chart, hourly chart, 30-minute, 15-minute chart. Those are the charts I look at, and it does not matter which chart that you put these on. I want to mention again, Paul, for you and for anyone else, I don't use Thinkorswim, so I can't tell you. I don't know. I use what I think is the best charting package in the world, hands down, and it's TC2000. I would, if I knew how to find it on Thinkorswim, I would absolutely point it out to you, but I don't know that. So keep in mind you can use this on any time frame that you want. So let's see here. Let's do this. I'm adjusting a couple of charts I have. So let's talk about goals. All right. Now, I am a born again options trader, thanks to my good friend Doug Campbell of Right Way Options. And 2 years ago, little more than 2 years ago now, I asked Doug if he would help me learn about options because I've never traded an option until then. 30 years I traded straight stock. Well, he helped me out, and we started with just directional. I kind of explained what I wanted, and he said, well, this is what you want to do. He gave me a couple of pointers, and bada boom, bada bang, for the past 27 months now, that's all I've done. So I want you to keep in mind, I'm going to be, it's not that you have to be an options trader. You don't. You do not have to be. All right. But if I'm looking at this chart, and if I trade from here to here with an option, I can meet my goal. If your goal for the day perhaps is $250, maybe that's your goal. Or maybe your goal is 15%, something like that. All right. Down the road, I'm going to be talking about scaling and how to scale up your trading, but you do the same thing over and over and over To scale up, you're just buying more positions, more size, and your 15% stays the same. If from here to here is 15%, that's what it is. You can't change that. So to scale up, you would add more shares or more contracts. Anyway, that's another topic we're going to talk about another day. So what I look at for my goal is, which my goal is about $200 a day. So all I've got to do is average $200 a day, and it pretty much covers my overall goal. Which, by the way, my goal from this year, 2020, was to double my account from 2019, and on the way to doing that. So what we're doing is we're looking for charts within that area, and it doesn't matter who you are, what kind of trader you are. I think when everyone boils their trading down, what you're going to do is you're going to find that you trade in a box. You look for flags, wedges, things like that. A flag. You could fit a flag in a box. Whether the box is that big or whether the box is that big, the flag is still in that area. You take the top of it, the bottom of it, and you've got yourself a flag. Or better yet, here you do it this way. Let's make it green. So you run up and then you pull back. So you have a bottom, a top, and then somewhere in here is where you're looking to be long on that flag. Or maybe it's a J hook is what you're looking for, a continuation pattern. Again, it's in this box. It could be in this box. It could be this size. But either way you look at it, it's in a box. All right. So with that said, you can actually change these. Now I shared the moving averages that I use, the T-line high, T-line low, and the 17 exponential low. You could use the 20 simple for that matter, the 50 simple if you want, and the 200 simple if you want, if that fits your trading. This fits my trading quite well. So what we're looking for are those chart patterns within our box. So for instance, right here, we're looking at E and B on the 15-minute chart. I can't buy this until it actually moves over that red line. I may, if I buy it in here, I may or may not take profits here. I don't know particularly. And if I didn't take profits and it pulls back, I'm okay as long as it stays above that red line. And you can see that it did. You could still be in it. So 15-minute chart, there you are. Another thing is you don't want to buy it below. If you're long, we're looking at a long situation now. And you don't want to buy it below. You don't want to buy it on hopes and prayers that it's going to go up. You don't want to do that. What you want to do is let it go up and then let it start doing this. And now you can see where you could have an entry in here. You can have an entry any one of those candles, knowing your risk. And that's one of the keys to trading, is knowing your risk. And once you know your risk, you know if you can take the risk. For instance, if the risk is, let's say we just let's buy it on this candle. Just pick a spot somewhere in that candle. Your risk 0.54%. I think every trader in the world can afford that. If we'll just split that one. We're down here, down there. There we go. So we use that other candle, that low. 0.56%. So you can see we've eliminated a lot of risk is what we've done here. We've given you a box to trade in. So any one of these candles could be bought anticipating the move up, and you know your risk as long as it stays above that red line. Also, we want to buy bullish charts in a bullish trend. You can see this has been up, but more importantly, I'm looking for these linear regression lines to be pointed to the upside. So we can be bought in here, this can be bought here, and there's nothing wrong with buying it in here. Nothing at all. What we do now we don't want to buy it way up too high, okay? What we want to do is buy it but we want to make sure that we look at our risk. And let's just say, for sake of argument, we buy it for $28.92. Your risk would be closing back below that green line. And note, it's 0.78% or less than 1%. So you really can you can get that box tight, and not so tight that it's always stopped out. I mean, I have great success with this, and you can see your risk. Now, for those that use other means, maybe you don't like this idea. No problem. You don't have to use it. But there are a lot of people that maybe you're used to using moving averages, bounces off moving averages, targets a higher moving average, things like that. This might be very, very helpful for you. Another way to do that. Let's see, a couple questions here. Is the red line acting as a stop? I think I just talked about that. On the stop, would you wait to see if the candles close below that red line? I usually do, Drew, yes. I usually wait till I see a close. Most of the time, okay? There are those times when I don't, such as maybe the market is tanking. I mean, like taking a nosedive to the downside. Then if whatever position I'm in, if it's tanking with the market, what am I holding on for if the overall market is tanking? How does percent boxes come in with TC2000? How do those percent boxes? Let's see. Clarity, I'm trying to figure out what you mean by percent boxes. These aren't percent boxes. These are linear regression lines. So you know your risk. Yes, you know your risk. I know that from here to here is 99.99%. Maybe that's what you mean. I want you to watch up here in this top left corner, okay? I can't, my mouse, it won't allow me to do this at the same time. So watch up here. I push my left mouse button down. You see how that little box comes up? See where it says plus 0.02%? I'm going to move my line down, my mouse down to the red line. See how it says 0.98%? And yes, that comes on TC2000. Yes. Let's see, is below. Let's see, I answered that already. Could you look at the SPY? Sure. Be glad to. Let's use the SPY here. And let's look at the SPY for a short now. Let's look at it for a short. A 15-minute chart. See how, now, okay, let's think about this for a second. See how these lines are moving down? They're 25-day linear regression lines, right? So you have to imagine if we were, let's see, if this was the only candle you saw right in here, okay? These lines would actually be right here, okay? I hope everyone understands that now. These are 20, they look for 25 bars back, and if this is the last candle you see, then these lines would be over here. So if they're over here, and now you start to fail, they will start failing these lines over here. Now that they have bent over and now started down, you can see how you might look for a short here. And no, I'm not necessarily looking for a short right here. Not at all. You can, but that's not what I'm looking at. What I would be looking at is this, and we come back up and we start to see a failure candle or multiple candles. So now what I'm going to do is put a line here right where the green line is. So every candle you're going to get that green line in there. So you'll end up moving with the green line. Now that we've put this candle in here, you can look at this chart. Any trader with any salt at all knows that this is not a bullish chart pattern right here. All right? That is not a bullish chart pattern. So we rally up. We see some dojis up here, maybe the first one, maybe the second one. Maybe you want to wait till this third one. I can't tell you which one is going to be the one that you want to get into. What I can tell you is no matter which one that you look at, you now know what your stop's going to be. And it is extremely small. I mean, keep in mind now, we're looking at a 15-minute chart here, all right? So you know that if we get a close back above that green line, you know that the bulls now are trying to turn that whole 3 lines right there. So now we come back below and boom, here you are. You're making money if you bought it in here. Now, as we get below those lines, what I want to do is go down to that lower line. We close above that lower line, I'm done with that short. I won't go back short till it actually moves back down. Because if it closes back up, they're trying to turn this thing back up, and it's too close to turning it. Now, let's take this and look at a 30-minute chart. You can see that same thing in a 30-minute chart. In fact, I think you can see it much, much clearer. So here we are traveling up. Everything is looking good. By the way, that would have been an excellent buy right there. That would have been an excellent buy. In fact, let's start with that. If you bought on this candle, and even if you bought at the top, your risk is going to be 0.76%. Again, everybody can afford 0.76% risk. Now, it moves up. We start throwing in candles like this. You might not want to be in it. Now, let me show you how I might reach my goal doing this. All right. If I buy this candle and we get up to 1.38%, depending on how many contracts you have, again, this is an intraday chart. So intraday charts, you're looking for small moves. You're not looking for overnight big swings. Let's keep that in mind. So do you think you could make, in my case, I already told you my goal was $200 based on last year's numbers, doubling my account. Do you think I can make $200 here? Bet you I can, and I bet you can too. So you've limited your risk. You're in your box. You play that trade. And remember, we're going to close it out if it gets below that blue line. And that's an ugly candle, but we never got there. And back up we go. You might be closing it out up here if you reach your goal. Now that we come back down, again, anybody worth their salt in trading knows that this is not a bullish chart. So, bullish price action, I should say. So now we come in here and we start putting these sideways candles in. Yeah, I'm going to go short this. And if I go short this, let's just, for price, let's say 260.21. I'll be stopped out if we come up to that red line, which this is still, once again, less than 1%, 0.73%, if that is the line we use, exactly at that spot. In the meantime, you're making money here. In fact, if you shorted somewhere, let's just say 259.95, you are now making money to the tune of 1.21%, which is not set the world on fire. I get that. But if you have enough contracts, that certainly meets your goal. And does it look like this chart could be heading down further? Sure looks like it to me. Now, once we break through those lines like that, we're going to trade this chart on the merit of price action, support, and resistance. So, let's just take a look at that. Right there might be a place we're headed down to. Right here might be a place. And you were able to get it in our box right here, right in our box. Let's see, Drew asks, why is that an excellent buy exactly? Sure. Exactly. I'll tell you why. Okay. We're trending up overall. We come down and we're trending. Whoops, let me make this blue. We're trending up again and we come down. All right. We're in the box now. And again, remember that this box would be over here, not over here. In fact, we don't know that any of this is here right now. All we know, it's over here. Let me make this pink. So if we count, the candles up, you're going to be something like this. May not be that steep because of that candle right there. It might be more, I guess it's the same, just not up here. More like this. All right. So what we're looking for is we're looking for a rally up and a pullback within that box. This type of chart pattern, and I apologize, maybe you don't know, this type of chart pattern is, to me, it's what money is made of right here. This is what money is made of, and that's what we're looking at right there. That's what money is made of. And so this candle, don't do that. So this candle here to me would be a buy, knowing that we have a tight stop and we have potential of moving higher. Notice this did not break below that purple line there. So that's exactly why right there. Yeah. Let's look at an hourly chart. Here's the hourly chart. Look at that right in there. We're holding in those bands. Would that not be a reasonably good buy? I think so. Here we have a morning star signal. And what's your risk? I mean, if you buy it, even if you bought it here, what's your risk? 1.5%, 1.6. Now, first of all, let's back up just a little bit. This is a crap market, and we're being dealt a crap hand. So what I'm showing you is not necessarily going to work to its best potential today. All right. We've got a horrible market out there. And if somebody is struggling trying to beat this market, don't stop doing that. Don't struggle. Stop trying to beat this market because you won't be able to. So what I'm trying to show you is when things kind of clear up a little bit. Now, you can use this. Believe me, I've used this for a long time, and I showed people in the room here live during the day on a couple of trades. So I know it absolutely works. But just keep in mind, we have a crappy market right now, and there is nothing anyone can give you that's going to change that. Absolutely nothing. So I'm looking at this as a buy. Let's get back to the charts. Looking at this as a buy. It moves up. You could have made money. It moves down. Now, because we tightened up right here a little bit, I might or might not still be in that trade. It's kind of hard to say. I'm not trying to take in any kind of, when I'm looking at these charts and we're talking about this, I'm not considering the coronavirus. I'm not considering anything. I'm looking at charts and only charts. I'm not considering the fact that job numbers are going to be in the toilet this week. I'm not considering the fact that earnings is going to be in the toilet. I'm strictly looking at the chart. So as I say, I might or might not still be holding this right now, right in here, because it hasn't broken through. Let me try to get some of these questions. Sorry. Do you set the EMAs first? We already went through that. Sorry, Tony. Everybody, please keep in mind, we went through that in the beginning, and I cannot go through that again in lieu of time. It is being recorded. Does a 17 band cross over either the T band have any significance? No, it doesn't, MT. Good question. Let's see if I can find if one's on here. There we go. No, I don't pay attention to those crossovers too much. I mean, if you want to look at it, what it's telling you is the faster crossovers, the green and the blue, is crossing below the slower crossover or the slower linear regression line. That has no value to me. I can see what it's doing. We're heading down. And yeah, so truly that has no huge value to me at all. Let's see. Eli, do you determine trend on time frame you are trading, or do you look at another? No, I look at, if I'm going to trade the 15-minute time frame, that's the trend I'm looking at. If I'm going to trade the 3-bar chart, that's the trend I'm going to look at. And speaking of, let's look at this chart. So here we are moving up in the SPY. Keep in mind, again, I am not taking in account that we have a crappy market. I'm not taking into account the virus. I'm not taking into account any kind of bad news like that. I'm strictly looking at the chart. So here we have a trend. I mean, overall, we have a trend. So we pull back. You know what? I just might take that trade. I just might take that trade. Now, I might take that trade during the day, all right? Not at the close. So let's say we're at the end of the day here. I just might take that trade. I mean, overall, we're sitting on some support here, aren't we? Let's put a line up. Look at that. Man, I would call that some pretty good support. I'd call that good. And if we want to go down a little bit lower, right in there, good. Because I'm going to use that blue line as my line that I don't want it anymore. If I buy this, I want it to go up. We're looking at it long now. So I might buy it here. And my risk, I'm going to go a little bit, just a fraction below that line. My risk is less than 1.5%. Every trader in the world can afford 1.5% risk. It starts moving. We could actually hook up to a nice little J hook here and then start roaring to the upside. So again, when I look at consolidation from a trend, I like those kind of setups. So here we are up, and here we are back. There's my stop. I might anticipate a bullish candle here. So let's do that now. So you see this chart. It doesn't matter what chart it is, okay? Chart's a chart. So we have these two candles coming down. We come to that blue line. You see a bullish candle right there. I definitely might take that trade. Now I know what my risk is, which kind of unfair there. And I can't look at the percent with that up there. So let's say I buy it right here based on that green candle that we put up there. My risk might be, 1.4%? Very affordable to see the cards to see if it's going to move up here. We've got a trend right now. Let's look at Marvel. Did we already? I don't think we looked at Marvel. Look at that 3-bar chart. Now this is not the all that's going to end all bad trading. We still want to use things like support. And if you can see this thing building support or a pop out of the box type chart pattern, you want to take that in consideration. So let's say I buy this right in here. Where am I going to put my stop? The next line down. Because if it fails here, where's it going? God only knows. I mean, we can come put lines up to we're blue in the face, but you don't know exactly where it's going to go. You don't. We can put hundreds of lines in there. Likely possibilities. But we'll never know until it gets there. So what I'm going to do is if I buy this on the fact we've got a doji here with a longer wick at the bottom versus the top, that might be something I look at. The fact that for the most part, we have support right in here, a little sloppiness, but a little support. Now, and let's get up here. Let's buy it here. What's my risk? A little bit below. I got a little bit below. That's less than 4.6%. That might be too much for some people. So that trade's not for you. Now, what if we did this? What if we have the same chart pattern here, but there we go. But all of a sudden now, try this again, Rick. Did this to me Sunday night too. Hold on. There we go. Now, suppose we put this candle in. Now, how does it look to us? Well, I'm pretty excited. I'm going to take that risk. And just for fun, let's buy it right at the top. So we'll buy it. So now you've got your risk, that line's going to be up a little bit. That red line will be up a little bit. So your risk 4.5%, somewhere in there. The upside potential, that's where we're going to come up here. We're going to put our normal lines to the upside. We buy it in here. Our upside potential's 12, 13%, maybe 10 to 13%. And now, again, I trade options, right? So if my goal is to only make $200 a trade, then, man, this trade, for anyone that knows anything about options, I just made a week's worth of goals right here in one trade. All right, let me try to grab some of these questions again. Why do you go short since the regression lines are pointing up? If price action is trending below those lines, they could be turning those lines down, Aloha. But this market swings 305 points a day. Remember, Paul, I said that when I'm looking at these charts, I'm not talking about the current market. I'm not talking about the market that is being given to us right now. I'm talking about making trades in a normal market, all right? There's nothing going to save you in this market. Nothing at all. There's nothing I can give you. There's nothing anybody can give you that's going to make this market easy to trade, because you're right. And 300 to 500 points, I think you're light. Got here a bit late. Yep, it's recorded. Yes. Rick, Nini, are these lines better suited for contract options? Got nothing to do with options or stock trading, Nini. This is a chart. A chart is a chart is a chart. Whether you use options or trade a straight stock, it's got nothing to do whatsoever with the chart. 3 moving averages. Tony, it's in the recording. I apologize. We've already gone through that. Price action, price action, price action, price action. You got it, Lauren. Inside that area, price action, price action. Here's the hourly chart. Okay, this right here is one of my favorite charts to trade. Hourly chart. Look how we've rallied up. Well, first of all, we've gone sideways, right? And see how we've broken out and we've pulled back. This is a great chart pattern to be trading. So I just might buy this in here, and I know that if it goes below that red line, I'm not going to like it. I'm going to be stopped out. Now, knowing me, honestly, I'm not going to use that red line. I will use that low, because I don't want it that stinking tight. That's pretty tight. If I was to buy that doji right, man, kind of hard to get it there, right in the middle, that's a pretty tight stop for me anyway. I'm more likely going to go down here and use my stop. But buy it in here. What I'm looking for is now a breakout, and we get above that green line. You've got some money that's going to be made in this chart. So you can use this in any time frame, and it might not look good in a particular time frame. Let's go look at the daily. Now see here, we're too high above those lines. That's a whole new trade. So on the daily, I couldn't use those lines on this chart. But on the 3-bar chart, I can use it. On the hourly chart, I can use it. On the, there you go, 30-minute chart. There we are right there. So we've got a rally up from here, a nice rally up, a pullback. You've got price action support. We've got a candle with a nice long tail on it, and we have a bullish Hiromi. So your choice could be, you could get in and buy it here, or you could wait till it starts breaking out over that red line. And you know now, I mean, talking about a perfect scenario, if you buy this in here and it moves up a little bit, man, put your stop right in there and just go have some coffee. Let it work at this point, as long as it stays above that 2260 area. So let's say that this chart moves up, and it just falters a little bit. And it moves up and moves up. Sorry, I've got to take these away. Now what I'm going to do is I'm going to use that green line again. Now remember, that green line will move, so you can move your stop with that line, because it will move. So now we've gone from here to here, and once we break out, what we have now is just a normal chart. We're too far above those lines on a 30-minute chart. Maybe we can find help on the hourly chart. Maybe we can find help on the 15-minute chart to use these lines now. So again, look, I'm a poor trader, okay? I mean, I had to figure out ways to make money. So I came up with these little ideas. Now I think a little different than most people, kind of, some might even say a bit wacko. But I realized that no matter what I do, I'm looking for an area to buy a chart. Even if you're a stochastics user, if you're a stochastics user, which I don't have it on here, but assuming this was stochastics, stochastics is floating around in here and it gets low, and all of a sudden you get excited. Well, guess what? It's in a box, isn't it? It's below, say, 20, right? That's what you're looking for? Or you're looking for it to break above, just above 20. Is that not an area? We are all traders within an area. So let's take advantage of that. Don't fight it. Take advantage of that. Make an area. And that's what I did. I mean, the T-line to me is very dear and close to my heart. So what I did is I created a box around the T-lines, T-line high and T-line low. So that means the T-line is going to be in the middle. So anywhere between that green line and blue line, that's the actual T-line is in the middle. I don't need it there to show that to me. I mean, if you wanted to put it there, you could. But I don't need it. I know it's there. So I created an area around the T-lines, around the T-line, using that T-line high, T-line low. The 17 is put in there because we've gotten to where we use that 17 a lot because it works really well with trends, no matter what time frame, and it works really well looking for a secondary trap. I say secondary because the 3/8 trap is primary, and a secondary trap might be the 8-17 perhaps. So, and I use that a lot in the whole trap area. Run out of breath. Let's look at another. Well, let me answer some questions here. David is saying, do multiple time frames help you stay in a trade? Let me answer that. That's a really great question, David. I honestly don't know of too many traders. I know some, okay? But I don't know of too many traders that are successful when they screw around with multiple time frames. I just don't know that many. I do know a few. I don't know exactly how they do it, but I know more people that make a mess of their accounts trying to use multiple time frames. Look, if we're looking at this chart, which by the way, I love this on this chart right here. I love this chart. If I'm looking at this chart, this is the chart I'm going to trade, period. I'm not going to go looking at other charts. Okay, maybe there's one caveat to that. Since I love the daily chart, then what I might do is go look at the daily chart. So what I'm going to do for fun is I'm going to put a line right here, and I'm going to put a line right there, then go to the daily chart, and that's where we are on the T-line bands. So I might look at that daily chart looking for resistance and things like that, but that would be the only chart I really go to make any kind of difference. But honestly, if you're looking at this chart here, trade that chart right there. Let's see, how do T-lines compare to the 3/8 trap? Well, let's see here. So let's leave these lines up. Let's put that in there. And then let's look at this chart right here. There you go, right there. So in this particular case, there's my 3, which I use the 3 high, a little different than most people. And there's the actual T-line, the 8 exponential moving average, the green dots and red dots, that's a 17 EMA. So we're right there in that trap. Bob, how do we access this session? We'll email the recording to you. Why are these lines only presenting on a section of the chart instead of the entire chart? Let's get that off. Let's go back to that. And here's something I want to do for you, Lauren. Remember, we're only using a 25 linear regression, so it measures 25 bars. If I come up here and I change this to, look at that green line move. If I change that to, there's 50. There's the 50 linear regression of the T-line high right here. So it's because we're using 25 bars. So it only measures 25 bars going forward. So if a new bar shows up, or when, not if, when a new bar shows up, it will drop a bar off over here. So it continually follows the chart. Thank you, Drew. Let's see. Look at, sure, Lauren. Look at WKDY. There we go. That doesn't work. WK. Are you thinking of W day maybe? I'll wait till you're below and maybe put it in there. Let's see, Ray. What's the red line telling us? The red line is just simply adding three lines in there. I think you need 3 lines, and it always the red line gives me an extra little dip, and you might say in the chart is what it does. And again, it takes that 17, which I happen to like the 17 a lot. It's like I like the 34 a lot, and it just straightens out that 17. All you're doing is you're taking moving averages and straightening the lines out. Really, that's all you're doing. See, Nigel is asking if you move the chart back in time, will the lines move? I don't know. Give it a shot. I don't know. I don't think so. No. What option are you buying when you buy it? What option am I buying? Well, it depends on the chart, Steve. In other words, if I buy Lilly, that will be different than if I buy Abbott. It'll be different if I buy Abbott. Speaking of Abbott, look at that. Can anyone not see a possible buy here on Abbott? Man, I like the way that chart is setting up on the hourly chart. Here's a 3-bar chart, which it's above the lines. I'm not interested in that. Here's a 30-minute chart. 30-minute chart says it's got to be above, a little further above. 15-minute chart. 15-minute chart, I could see the potential there. But I like the hourly chart. I think the hourly chart would be more my style because of the price action. And here we've moved back right to that red line. And then what I would want is to see price action above. Or I could be a buyer here. I wouldn't buy it at the end of the day like this. But say this is in the middle of the day. If I see something like this, I might buy that knowing my stop is extremely low or my risk is extremely low using that area. Now, what I will do, and I'm not just blindly using that line right there. I'm taking that into consideration with some price action as well. So if we look at this chart, if I want to, I never want to enter a trade looking to get stopped out. I don't want to get stopped out. So what I'm going to do is always try to find that price action and go a little bit lower. So if the low of this chart is 78.56, well, I might come over here and 78.50 maybe. Give myself a little bit below that low. Excuse me. I hope that made sense, Steve. It's not the, I can't tell you what option because I don't know what chart we're looking at. Let's see, Drew, Steve. Okay, thank you. Bob, Ed, thank you. What if the 17 moves outside the T-bands? What if the 17? Rusty, if you're talking about the moving average, I don't see the moving average. So how would I ever know that? I know it's there, but I'm not looking at that. So I'll never know it. And I can't guarantee that's what you're actually asking, but if that's what you are asking, I think the last thing you should do on earth is put those moving averages in there. Take them off because they're going to mess with you. What you're doing is looking for all you're doing is looking for in this case, Abbott, we've got a nice trending stock. And again, take these moving averages and go back, these linear regression lines and go back here. If all we knew was this point back, in other words, this has not occurred yet in time, these moving averages would be over here, just like that. 3 moving averages, or 3 lines. As they move up, you can see how this went flat. Well, this might have moved right back in between the green and blue, or awfully close. So now you can start looking for an entry here, and now that move back, if we move this back just a little bit, you got to know that this is inside these bands. That might be a buy for somebody. Here we've moved back. That might be a buy for somebody. Here we've moved back. This might be a buy for somebody. So if what you're talking about are the moving averages, you definitely don't want those on the chart. We want to straighten those out is what we're doing. Is a 3-bar chart 130 minute? Yes, it is, T. Let's see. Trader X, are you still using the same criteria for options, 70 to 80 delta, about 60? Yes and no. You've got my numbers wrong, but I'll straighten them out for you. Let's go 50 days plus, way plus if you want, and then around 70, which means I would be tickled pink with a 65 or a 75. That's more like it. And then open interest. I want open interest. There's my criteria. That's it. That's it in a nutshell. Let's see, Rebecca. I thought at the start of this discussion you said you wanted the price action within the box, the blue and green lines. No, the box is all the lines, Rebecca. All of the lines. Let me see here. Let me find, take GILD right there. I want them within the box, So GILD right here looks like a buy to me right now. So tomorrow, when the market starts opening up, I'll look for a buy. I don't want to buy it up here. I'm not interested in that. In a perfect world, honestly, I'd like to buy it within that little area right there. And now, by doing that, I know what my stop is going to be, and I even know what my risk will be. Let's just say we buy it in the middle of that red box somewhere. My risk, I'm looking at less than 1.5% risk. And the reward, that's really not what we're looking at tonight, but reward up here might be right there one place. Reward might be maybe in here, something like that. So if you buy it here, your risk, what did I say, 1.4 maybe, less than 1.5. Reward 5%, reward 10%. And if you're buying an option, you know that is great money. Yeah, don't be confused, Rebecca. All you're doing is you're looking for a chart and you've created a trending box is all you've done. A trending box. Let's see if I can find another one here. Actually, I think T is a short. See how T has been trending? Everything's working out fine. It has now fallen below the box. So this is a possible short down here if you want. But if it came back up, man, I would love to short it around 29.65, give or take a few pennies. And if it gets through, you know where your stop's going to be. So say we buy it at right there. Your stop, about a 1.3.5, 1.4% maybe risk. So don't be confused, Rebecca. Don't try to put more into it than it is. It's just a trending box to trade within, is all it is. Let's look over here. Again, if this right here hasn't occurred, and this is the only thing that's occurred, and this is what has occurred, then this box would be down here. It would be starting to turn flat, a little bit flat, angling up. And all of a sudden here, it breaks out, and now you would use the top of the box for that entry, because you know if you use the top of the box and it goes below, you don't want that. That's not what you want this chart to do. It either works for you or it doesn't. And then you can see the money that can be made from about this point on, right up in here, and right there is 10%, 10% or so. So please don't be, it's not, I'm certainly not trying to make it confusing. it's just a trending box, you might say. Trending box. Does the green line and blue line pinching? Nah. Somebody asked me that the other night, and I don't pay attention to that at all. To me, it has no value. What it is telling you is the moving averages are coming close, but I don't use that in any way. The fact that they're pinching or getting closer. Tim, this is cool. Recording. Thank you. Yeah, we'll have the recording out. Yep. Let's see. Sorry, the 325. I don't know what you mean there, Eli. Let's see. Thanks, Rick. Thanks, David. Let's see, Rusty. I'm looking at the chart in which the price action went from below the T-band to above the T-band high in one segment. Yeah, Rusty. Basic charting 101. If the chart moves up too much, you don't really want to chase it, do you? You want it to come back, right? So basic charting there. T25 bars, about 1 month, yeah. And not that it has anything to do with it, but there's about 21 trading days a month, but that has nothing to do with it. Yeah, there we are. W day 15 minute. So let's look at that. There you go, 15 minute. Now, I'm not, the bands here are not going to help me out too much. They're really not. I'm not going to use them in any way for this chart. There's just nothing I can do with them, other than maybe I want them to trade over the band. So price has to trade over 130.27. But really, for this right here, there's no value in using those bands that I can see. Yeah, there's no value that I can see at all. Whoa, hold on. Let's look at the daily chart, right? Let's look at the daily chart. What's that telling me? If I want to use the bands on the daily chart, now that might be something. If the bands are my thing, if everything that I'm going to trade, if the bands are my go-to, okay? If that is my only go-to, then I would look at the daily chart. Now, you got excited over the 15-minute chart, and I would too. It looks great. But if I look at the daily chart, honestly, I see nothing but garbage there on the daily chart. So I wouldn't touch that chart with a 10-foot pole right now. But I do like the fact it's pulled back to the band. I like the fact we've got support on the daily. We start seeing it move up. Now is when, the 15-minute chart got your attention. But until we start showing some bullishness here, I would be hard pressed to even trade that chart. But the 15-minute chart, the band just doesn't have anything that I would look at. Not much at all. Let's see, XLV. Let's look at XLV. XLV, there we go. Nothing on the daily band-wise. Nothing on the 3 bar. Well, let's go down further. Hourly, 30-minute. There we go. So now, here we are down there. That right away gets my attention. But one thing I want to point out, looking at this chart, let's do this. We have a top. As far as I'm concerned, that's a failed top. And let's change that color to a little bit of red. We've got a high to a low, to a failed high, to a lower low. So keep in mind, you've got this going for you, which is not good if you're looking long. Maybe you're looking short. I don't know. Now we have a bullish Hiromi on the 30-minute chart. So if I was to buy this, it must get through that blue line and definitely close above the red line. I'm going to look at the daily one more time. Yeah, I can't say whether you're looking at this long or short. I don't know. But right now, on that 30-minute chart, I don't see anything bullish via price action. If it started to move up and get up there, then I could get a little excited about it. But going to have it move up a little. What about volatility in the option plays? Once again, I don't play by the same rules most people do. I play by my rules. Again, what I look for is 50 days plus. I look for delta around 70, and I look for good open interest. At least 10, 20 times what I'm trading. That's what I look at. One thing I didn't mention earlier is when I'm looking at the bid and ask. You've got the bid, you've got the ask. I want less than 9% is what I look for. I'll trade at 9%, the difference, but I definitely want it less. You get into that 2% range, I'm pretty darn happy. Anything below that. That is all I look at, Paul. Again, that might not work for you, might not work for other traders. It works for me. It just does. And the account shows it. So, I don't know what to say from there. That is all I look for. Is there a way to get the recording? Yep, we're going to do that. Never mind. Yes, I did take them off. Awesome. I'll send an email. Thanks. Last question. Do you set OCO orders with option trade? Not normally, no. If I want the trade, I just buy the trade. Like today, I bought SH, closed up $300 on it. Still in it. I brought some SH. Was it the 30-minute chart? I think it was a 30-minute. Here's a 30-minute. See how we rallied up into the bands, and then we pulled back. That's the type of chart I look for. I want that rally, and I like to pull back inside the band. It gives me that box, is what it does. So I know that if we got below that red line, I better be thinking about whether I want this trade or not. We get above the green line, I'm good to go. I might go to a different chart now. Do I have a trade here, or there's a trade here on the 60-minute. So now I might move into that 60-minute and use that as my chart. So anything below that green line, then I might close that out. Otherwise, I just keep it going. Let's see, where are we? Last question. So actually, to answer your question, Paul, normally I do not. If I want a chart, I buy a chart. I don't try to mess with things like that. I don't try to, and for me, I call it, messing or making the trade problematic. If I want to buy it, I don't argue with 27.64. If that's what it's selling at, that's what I buy it at. I don't go out there on purpose anyway and try to get for 27.60. I don't do that. Sometimes I get lucky and just fall in good smelling mud, but I don't go out and do that. It's just not me. Only buy between the lines. You can buy above the lines too, Clark. If you're buying long, you can buy above the lines. If you're buying long, you do not want to buy below the lines. Nope. And vice versa for short. You're welcome, Trader X. Let's see, MT, do you use 25 bars for the intraday charts? Nope. Gordon, Rick, do you still actively use RBB setup? It's my favorite of all setups to this date, Gordon. Microsoft. I look at the hourly chart on Microsoft and I'm thinking, I want that on my watch list. Yes, sirree. Absolutely. Now, I'm going to need to see a green candle here. I'm not going to just buy it blindly tomorrow. So I want to see a green candle on here. Let's take this down to a 30-minute. Nope, don't like it. 15. Nope, don't like it. Let's go up. There's a 2-hour. Okay. I still like the hourly best. There's a 3-bar chart. I like the 3-bar chart. I like that a lot. 4-hour chart. Can't really use the bands on that one. Here's a daily chart. Can't really use the bands on it. I would say the 3-bar chart and the hourly chart are the two charts to use on this if you're looking for it. Right now, I see a long trade. If you're looking at the daily, you're looking at that shooting star up there. You might get a short out of it. Right back to support, perhaps. Let's see, Drew, do you sell your options at a certain risk reward value or the chart? I use chart. 110% I use the chart. Chart resistance. Let's leave the word resistance out of there for a minute. That's getting too deep in the woods. I use the chart. At your daily dollar profit. Sometimes, there you go, sometimes I will sell at my daily dollar profit. Thanks for asking, Drew. It was just today. I changed my goal numbers because I'm way ahead of my yearly goal. I'm like way, way, way ahead of it. So I changed my daily goal to 975. I think 975 is my goal. Now, let me explain that for a minute here, okay? With the charting or the trading package I use, which is TradeHawk, and I'm, maybe I shouldn't have said it that way. Every trading package probably has this, okay? So when I'm in a position and it is up $975, then there'll be a green box go around it like that. That tells me I want to sell half because my daily goal is $400, say $50, okay? That's my daily goal. That's what I want to make on an average a day. So I double this because I'm going to sell half of this and then I'll manage the other half. Thanks for asking that, by the way. Hope that made some sense. We can talk about that in the room tomorrow if you want, a little bit more in depth. There you go. I think that answered it. I think. Let's see, Harry, do you usually determine direction of the trade, long or short, based on the higher time frame? In normal conditions, Harry, yes. The current market conditions, I've been trading 30-minute and hourly charts more than I've traded in 10 years. I've traded those more in the past few weeks than I've traded in 10 years altogether. Because the daily charts just aren't giving us good trades, I don't think. But I find the 30-minute and hourly are giving us good trades, good setups, rounded bottom breakouts in those time frames, J hooks in those time frames, good bands in those time frames, good traps in those time frames. Let's see. Talk more about exits. Drew, I'm a goal trader, all right? And that's another thing that's probably not what most people are. I'm a goal trader. So, like I said, if my goal, I have it set up so that right now I have it set up so that green box shows up when the trade gets to 975, and then when that happens, I'm going to sell half the trade. Now, do I just arbitrarily sell that? No, I don't. If I'm sitting here watching it and the chart is just it's just doing great, everything is just smoking hot, and let's say right here was 975. Everything is just smoking hot. Well, I'm going to sit here and let it go. I'm going to let it go. And then the first sign of weakness, I'm out half this trade, hands down. No questions asked. And at this point, this trade might be, I don't know, $1,200 maybe, $1,500, something like that. In which case I've made my goal twice over. So that's something I do that I find most people don't do that. Most people come up here and, they put, that's their spot, and they stick with that spot, and the chart goes up and up and up. It gets close and it fails and fails and fails and fails, and they never collect their money, or they sell it right here at a loss. So I'm a little different in that area. I've worked commission all my life, and I treat trading the same way. If if you get paid this much, and you can do it in less amount of time, maybe that's turning it into commission work, then I'm going to take it. If I can change an alternator or a starter in 30 minutes but still make $975, good for me. I'm going to take it. I'm going to pull my car out of the garage, and I'm going to pull another car in. I come from an automotive background, and that's where that comes from. So I don't, I don't buy charts, and I don't move my stops up. I don't do that. It's just my style. Somebody else might, and they might make a lot of money doing that, but it's just not my style. So, thousands and thousands and thousands of ways to skin this cat. One of the biggest hurdles for traders is to figure out how to skin the cat your way and not get sick. Thank you, Rebecca. And believe me, if you ask me questions down the road, I don't want this to be confusing to you at all, because it's really, really not. All you're doing is you're looking for the normal chart patterns that's normal chart patterns. Here, I can do this. Let's see, T-line. Oh, let's see. Oh, I'm going to change this right here to the 3, and I'm going to change it to the high, and let's do that. And now let me do this. I'm going to I'm just going to flip through some charts till we find one. Oh, wait a minute here. Let me think about this for a second. Let me think about this. There we go. Hot dogs, chicken, and gravy. Alrighty. So here's the T-line bands. And that orange is kind of obnoxious, isn't it? Let's make this green. Not that green. Let's go this green. Let's make it solid. There we go. So what I want you to do is watch the T-line bands and watch the trap. So what I might be looking for is a T-line bands, or I'm sorry, a trap set up within the bands. You know what? Let me go 60 minute. Let's see what that does. Crazy market is hard to find anything you want. Well, all right, let's take SKY. Here's the trap, and we're right there at the top of the band. So using the band, I don't want it to get in the band. If I buy it here, I don't want it to go down there. So my stop would be right in there. Let's take this right here. See how we've moved down and we've started moving up? See, we're in the band, the green and the red, and now we're in the trap. See the black and the green right here? Those two? See, we're in the trap right there. So what you're looking for is you're looking for a price action chart pattern, which that's what the trap is. It could be other. It doesn't have to be the trap. It could be a flag. It could be a pop out of the box. It could be monkeys dancing on rooftops if you want, as long as it's within that box. All we've done is create that box. If you want that box wider, just change your moving average to wider. Somebody said that they use the 20 and 40. I think it was somebody told me that. 20 and 40. It wasn't the 50. I know it was a 20, and I know it wasn't the 50. But you can adjust those box to keep that box still a box by using different moving averages if you want. If you don't like these. This keeps it somewhat narrow. It does do that. Okay, Eli, what are you talking about today is mostly for day trades. Not necessarily. I might buy a chart on the 30-minute chart. Let me give you an example. SH, I bought that today. That's not a day trade because I held it overnight. And I might hold that for 3, 4, 5 days. Who knows? But I bought it on I can't remember now if it was, it must have been the hourly chart. I don't know. It was either 30-minute or hourly. I don't remember now. So that's not necessarily true. No, not at all. And when you say, are these zero expiration day trades? No. Once again, it does not matter what I trade. It does not matter what I buy. I'm going to look at charts or options at 50 days out, around 70 delta, and I want good open interest. Period. I cannot stress this enough. That is what I do. Every single trade. In fact, I'm so adamant about this. I'm going to have a little chat with the guy that he owns Trade Hawk. He's the Trade Hawk guy. I'm going to have a chat with him and see if he can build something that's all I see. That's all I see. I'll give him a minimum of open interest. I only want to look at this. I don't want to look at all the other stuff. I don't care about the other stuff. I want only this to come up, and then I'll choose if I want to take that trade. I don't know if he can do that, but it doesn't hurt to ask. You're welcome, Alan. Don, with red line moving up, is it still possible to play long? Well, Don, yeah, you can do whatever you want, honestly, you know. Let's see, Bob, W days is short on the daily. W day. I don't necessarily agree with that just yet, but I'm not going to be long on it either till I see it change. You might see some support right here and turn around. So I'm not. Actually, here's what I'll tell you, and this is what the trade ideas for today were when I went over them this morning. They were all possible longs and all possible shorts, and they looked pretty much all like this W day right here. It's about follow through. Are we going to follow through up? Or are we going to follow through down? Yes, this is a bearish H pattern. Yes, it is. Whoops, there we go. It is also a low high, and so far it's making a higher low. So that's the way I see it. No worry, caps are okay. Please show us yesterday's trade on. Please show us. I remember what I did yesterday than the man in the moon. I no more remember that than the man in the moon. Sorry, doll. I don't remember what I did. Nigel, Rick's previous, how to set up the T-line regression channels, 11 minutes long. Thank you, Nigel. W day looks like a decent short. I already talked about that. OSKT. That's a nice chart. I'm going to write that one down. It's the only one I've written down tonight. OSK. Thank you. That is a very nice chart. Look at that here. Let me get rid of this. This is making me go dizzy. And get rid of this. There we go. Look at the 30-minute chart using the bands right here. Look See how this went flat? Now remember, let's move these back a little bit. Move it back. It starts moving up. So these bands are going to be somewhat flat. They're going to be heading down. Well, they're going to be up. They're going to shoot down. They're going to kind of flatten out. And then they're going to start coming up. So this right here, it might have come down to that green line, which that would have been an excellent buy. Look at the price action here. Right down to the green line and then back up. And here we've pulled back to the green line. Didn't really go anywhere at all. No follow through. And now look where we are. So I look at this, I'm thinking, if it goes below that red line, that's the low. I wouldn't like it. And, you could put it right here too. And actually, let's put it using those candles. And I'm going to go ahead and put one there. And there's the daily chart. And there you go. In this market, I'm keeping things somewhat tight. So, maybe, well, to start with, we don't know where it's going to open up yet. That's, number one. So I might keep those lines up there. Let's see how it opens and then trade depending on how it opens. But right now, if this was in the middle of the day, that's what I would look at, and that might be two possible stop areas. Pete, I'm at work right now, and I missed the first half hours. This recorded, yes. How much open is? 10, 15 times what you're going to trade there, Eli. What is the first figure? What is the first figure of 50 you wrote on the screen? 50 days out, Bob. 50 days out. Plus. And I might go out 180 days, even though I sell it in a week. I'm still going to look at 180 days out. One thing that might happen too is, what if I enter a position like OSTK, and what if I, knowing me, I usually don't keep things too long. I would be, I'd be a profit taker in this area right there. But what if I only sell half? Well, I might let the other half go. And who knows, might let it go a month. And I don't ever have to worry about expiration. And also, too, what if you're wrong? Look, I don't, to start with, I don't think the majority of the people here stick with stops, all right? In my experience, it doesn't happen. Sorry, I don't mean to, upset anybody there, but in my experience, it really doesn't happen. So what if you buy this and you don't put a stop in and the price ends up down here? Does that mean we're completely failing? No. Does it mean you made a boo-boo? Yeah. But if this goes up and comes back down, and if the market is still holding up, there's a possibility that this just comes down and tests and then starts moving back up. So by going out far enough, you've got enough time to work with it. Man, I hate it, and I've done this. I've hated when I'm in something, I did a boo-boo, and I don't have enough days to wait it out. Then you're kind of screwed. Same thing happened to me, Pete. I was told there will be a copy. Don't know what you mean there, Mig. Thanks, Nigel. Oh, yeah, thank you, Nigel. Number of days out, Bob. There we go. Thanks, Mike. There we go. We're getting close to calling it in here tonight. Angela, Rick. Thank you, Angela. Appreciate it. Thanks, Ed. Yes, thank you, Ed. Let's see. Generally, how long do you hold an options trade? If I am in a position and my green goal is 975. Here, I'm going to check something. I can't remember now. Just take half. So 975 divided by 2. Let's call it 490, okay? So my green goal, in other words, my program will turn that green. That means that I've got at least $490 headed to my pocket. Okay? So, your question, generally, how long do you hold? If that happens in one day, I'm going to take it. If it happens in 10 days, I'm going to take it. So, I don't know what my general hold time is. That is not important to me. That is just not important. I'm a goal trader. So I know what I have to make my yearly goal. And I break it down to the day. Now, don't get me wrong. Please don't anyone think that I make that a day. Absolutely not. Absolutely not. I have red days all over the place. All over the place. But when I have those green days, I take it. So when that green box shows up on my program, that means I'm up $975 on the position. And if I have 10 contracts, what I'm going to do is I'm going to sell half. So I'm going to sell 5 contracts. I'm going to put that in my pocket. Nobody can take that away. Nobody can take it away. And then I will work with that other $490, that other 5 contracts. So if it wants to move up, okay, let it move up. I might work with it. I might work with it. Let it keep moving if it wants to. And at some point, I will sell it. So again, how long just doesn't matter to me. What is a 3-bar chart? Don, the 3-bar chart, you can on TC2000, it's a 130-minute chart. And all it is it breaks the day down into 3 bars. So take OSK. There's the first bar this morning. There's the second bar, and there's the third bar. So let's work it backwards now. So the first bar, what is today, Tuesday? The first bar on Monday was a bullish engulf. Here you had follow through, and here you had an inside day doji. If you want to split them, there's 3 bars right there. So it's just looking at 3 bars. That's all. You're welcome, Scott. Thank you very much. Seahog, Don. Thank you, Seahog. Drew, we are here to learn your methods. Otherwise, we wouldn't be. Thank you. Thanks, Drew. Can I ask? Absolutely, MT, about this in the room. Oh, sure. Yeah, absolutely. Ask me in the room. Anything you want. You bet. That would be great. LTA scan, trap inside the bands. Drew, there is. Ha. There is. All you got to do is build it. Remind me tomorrow, and I'll show you how to do that, okay? Really easy to do. Real easy to do. So for those that aren't familiar with the what Drew mentioned there, the LTA scanner, it's a live scanner. If you don't have it, you're missing out. Enough said. Drew, remind me tomorrow, and I'll help you set that up, okay? What minute open, what's a minimum open, let's see, D, what min open do you like? There you go. I type, my typing is worse than that, D. What minimum open interest? 10, 20 times what you're going to buy would work. 20 times. Say 20 times. Let's take a stand. 20 times. 10 contracts times 20. Rick, TC2000 can filter option chains and the way you're proposing. Thanks, TJM. I might have to look at that. Thank you. I didn't know that. Sam, is LTA scanner part of TC2000 software? No, it is not, Sam. It is actually a piece of software that is totally separate. You can use it with, if you just want the scanner, you can just look at the scanner. You don't even have to be a trader if you want. You can just look at the scanner if you want. You don't have to have, you have to have internet. You have to have internet. It's a standalone. Thank you, Bob. Appreciate it very much. Mig, thank you, Mig. Appreciate it. Yes, it is being recorded. I just double checked. Yes, it is. Hour and 45 minutes. I type OSTK by mistake. Okay. Larry D. Gwynn. Are you seeing LTA as part of TC subscription? No, she's not. There we go, Ed. Here's something you can do with the LTA scanner that's kind of cool. Keep in mind, I use TC2000. So watch this. I can double click on the scanner and bada boom, bada bing, it changes TC2000. That's pretty darn cool when you think about it. That's pretty awesome, actually. Let me move this out of the way now. And I think Ed is saying there, Thinkorswim, it works with Thinkorswim that way, and TradingView. Thank you, Rob. Appreciate it. D, sorry, I may have missed your answer. What did you say you like your minimum open? 20 times the amount you intend to trade. 20 times what you intend to trade. Your wife will take it away. She will. What is your open? Let's see. I just said that. All right. Okay. All right. Have a great continuation of your evening all. Thank you, Phil. I appreciate it. Okay, let's call it a night, folks. Members in the room, ask me tomorrow. In fact, if you need me to go through to help you set this up again, I'll do it again tomorrow in the room. We have more time. We literally have all day to do that, so we'll definitely get that done. What else? Everybody be safe. You know, all the trading in the world is not worth not being safe right now. So please be safe and please take care of yourself, okay? You guys have a wonderful, wonderful evening, and we'll see you all tomorrow. Thank you so very much. Hey, this works. It really, really does. All right, night.